recording. All right, I'm just going to answer Richard's question before I formally get started. Oh, about trends and stuff, right? Because I think you mentioned earlier last week you had held, I think, downside positions, right? You entered the week with downside positions.
Well, on market strength, I had entered into some of the downside positions in the banks for puts for August and September, and I started a new position in Carnival Cruise Lines on their uptick, because a number of us think that it's probably going to fall off pretty good later in the summer.
Okay. Now, just take everything I'm about to say. You know, obviously, you're buying time and you have your reasons. I understand that, but what I will say, and I've said this to a number of people, when it comes to, I guess maybe earlier in the year, there were some great opportunities to enter in puts with like a month or two out and that kind of thing. But just be careful in this market, because the market's been showing a kind of a pattern almost where we rally and then dump, rally then dump, and you don't want to. I mean, maybe some individual tickers may be the exception, but stuff that's, you know, relatively impacted by whether the S&P or the Nasdaq or whatever is moving, you don't want to be buying puts even though you have time, you know, too early in that rally. I'm not saying we're going to keep rallying. I'm just saying you want to, you know, like I was saying yesterday on my webinar yesterday. I don't think you were on it, but and you can go back to it in more detail. What I'm trying to say now is basically the market was showing immense strength. It was holding every support. It was breaking every resistance. Like last week was like one of the best acting market weeks. And I'll actually show that when I'm going through chart patterns in a while. So I always tell people, if you're looking, if you have a general thesis of a direction, you know, maybe not, that may not immediately happen. You don't want to be too early before the turn. You know, I mean, I'm not saying anyone can time it precisely. That's why you're buying time, but you don't want to time it so early or so imprecisely that, you know, you're just costing yourself potentially. You're paying more, or you could have, you know, various things like that. Does that make sense?
Sure. As it goes up, you have an opportunity to buy into those put positions a lot cheaper.
Yeah. So just be careful. Again, I'm not going to speak to the individual plays and tickers because, you know, there's obviously more details there. But just I've seen a lot of people this year at various times, whether we were going down and they, you know, they either didn't flip early enough, or they flipped too late, or they flipped, but then they tried to reflip too early, if that makes sense. You know, they weren't expecting, like in March, a lot of people weren't expecting that huge rally we had. A lot of people I know were buying puts way too early, even though the market wasn't showing weakness until the end of March. You know what I'm saying?
Yeah, I mean, that's why a bear market will tear you up.
Absolutely.
And on the rallies, and that's one of the reasons, as I said earlier, I'm thinking about following you and just, you know, going to trading 0 DTE SPX, because then I'm out every night. I don't have to worry about what the turns are. I just go level to level and go with the flow. And I think, frankly, it helps you to keep a much more level head and to remain unbiased.
And I don't have to care so much about checking futures overnight to see what the market's at.
Yeah, I value my sleep too highly for that.
Yeah. Okay. Let me just make sure my settings are all good. Okay, I'm gonna mute you, Rich, for now, or you can mute yourself, whatever works. We'll get started. Good talking to you. Okay, let me just. Okay, hey guys, I was just chatting up with Rich and answering one of his questions that I thought was relevant, and that part was recorded. We'll get started in like 20 seconds once I make sure that. Just changing some security settings here to make sure no one can do too much. Second. Recording should already started. Okay. Welcome. I see a good number of people. Welcome. I guess this is episode 10, but this is gonna be the future of what I'm now calling the 405 Club, because once I finish my move and we get this to be more sort of official and regular, I'll start right after the market closes, hence 4:05 p.m. Eastern time. Anyways, okay, so welcome. Again, thank you all for joining. It's very impromptu. I'm glad to see, you know, good number of people. Last night we had a bunch of questions, but again, just because I'm moving, I'm just fitting things in here and there, but it'll be more regular in about, I don't know, a few weeks, a month. But anyway, we came here to talk about and look at charting. And I talked about some of this on my webinars, or 4 or 5, I'm still getting the name right. This past week, I alluded to some, I talked about, but I wanted to like kind of just do 10, 20 minutes of, just running through some patterns, literally just from like recent action. Well, we have a great one right here. And so these are right now, these are all 5-minute candles. Don't ever look at 1-minute candles or less than 5-minute candles. It's not gonna work. You're gonna see every little uptick down kick, and you're gonna be like, oh my goodness, we're squeezing, we're dumping. Don't look at anything under 5. A lot of people don't even look at 5, and I understand why. You should look at. I look at anywhere from 5, 15, 30, 1 hour, 2 hour, 4 hour. But on a intraday basis, my default view is 5 minutes. If I need to zoom out, I'll zoom out. But 5 minutes, I find it has worked for me. 15 doesn't give me as much details, and 5 minutes does. And plus, because of my confidence and because I do the work in planning my levels and recognizing which chart patterns are misleading and which are not, that's why I use 5 minutes. I see someone raise their hand. I will possibly take some questions at the end, but you can keep your hand raised, no problem. I'm just letting you know. Wow, a lot of people have joined. This is great. All right, we're just getting started. So some chart patterns. I mentioned this on my webinar yesterday, but I'll just go over it again. This is the NASDAQ NQ intraday. This was the open yesterday. Big rally, first 30 minutes. And this is look at this. So this was what, 10, and it ended at 4 hours, a beautiful bull flag. Now, some people, if we'll see, like, for instance, if you cut it off here and only saw the left part of here, people are like, oh, maybe we're flagging, maybe we're flagging. It could be, but it's not. Look at this over 4 hours. This is beautiful. Like, obviously, it's not like literally like, computer perfect, but that's about as beautiful as can be. And look where it is. I had a big, well, I guess it was a resistance line, but now it would have been a support. And look, it's hanging right about there. And look at this. And see this up, down, it's getting smaller. This drop was whatever, how many points. This was a little, see how it's like winding, consolidating, and then coiling up, and then boom. And it actually led the S&P futures, because the S&P futures actually didn't break until closer to 3, whereas this broke out at 220. What the heck? What is going on? Well, I don't know what's going on in chat. Let's it's all good, guys. Let's calm down. Appreciate you all and your patience, but let's keep it relatively clean. If anyone goes a little off board, I may have to kick people out, but I don't want to do that. Okay, yeah, okay, all right, that's it. Please, that's it. No more. Yeah. All right, guys. Let's calm down. Anyway, moving on. What was I saying? Oh yeah, this is beautiful. This broke out. Okay, very bullish, especially on a very bullish day and a very bullish week. I did cover yesterday this pattern. I don't know what the official term is. It may, some people think this might be a bull flag, especially when it starts. I think it's like a rising wedge. I'm not familiar with all the terms people use. But this pattern is actually, in my experience, okay. All right. I'm going to start kicking people. I don't know what's going on here. Give me a second. I have to start kicking some people out. I'm sorry, guys. Give me a minute. What the hell's going on? What the hell? Okay, give me a second. Sorry, guys. Sorry, guys. Yeah, sorry, guys. I'm kicking some people out. This is the issue with linking things publicly. Once I start getting things going next month, the links will be private. That is one thing. What the hell? Okay, this person is. Sorry, I'm booting people. I'm working on it right now, guys. Give me a second. I really apologize. This will not be a thing down the road. The links will be private. I'm really sorry about that, guys. That is there anyone else I need to kick out? I'm really sorry about that. That's not, trust me, that is not what, I'm sorry. Is there anyone I missed? I kicked 2 people out. Give me a second. I'm really sorry, guys. Paul Simpson, what is that? I think he already left. I don't see him anymore. I think that's it. Okay, I think that's it. Anyone else, like, let's just not even focus on that. I think that's good. Yeah, again, sorry guys. I guess it's not really a secret because I've been telling people I am planning to formalize sort of these functionalities in my webinars. But again, I'm working on keeping things private, and it won't be like this going forward, starting in about a month. And again, sorry about that, guys. Really sorry. Anyway, this pattern, a lot of people have this one. People have debate. I see a lot of people say this is bullish, this is a bear flag, and other people saying like this is very bearish. And honestly, in my experience, this pattern can go both ways. All right, just all right. All right. No more, guys, please. No more. Okay. Anyways, yeah. So lost my train of thought. Oh yeah. So I explained yesterday why in this situation I thought it was more bullish because the week was so bullish. The action overnight, and I'll explain that in a bit, and leading to it was so bullish, so I leaned bullish. And because we were, we're coming off like yearly lows, and we weren't even that far from yearly lows. So I'm kind of working backwards, and this was overnight, Thursday into Friday. And you see how we closed Thursday on, whoops, that's not Thursday. This is Thursday. We closed on strength, and then we consolidated. And look at this overnight consolidation. It's beautiful. It just hung in between levels and never dropped lower, never went higher. And a lot of times if you look at overnight action, it's way wicked. It'll rally and then fail. It'll dump, and this is like beautiful. So then everything will take off. Someone can't see my screen. Can everyone see my screen? One person said they can't see my screen. Okay. Sorry, I gotta kick more people out. More people are getting kicked out. What is going on today? This is all right. Sorry, guys. I just kicked that guy out. I'm really sorry. This is the first time this has happened like this. All right. Moving on. It's getting ridiculous. Sorry, guys. Right. And then we go to Thursday. So this is Thursday intraday. And 2 things I want to point out about Thursday is this was overnight, and then we kind of opened, I think, around here. You could make the argument right here that this kind of is forming a double top. The problem is right here, this is what I call not being clean. I'll say this a lot. I'm looking for, can people see my screen besides Jonathan? Can someone type something? I'm assuming people can, because I would have had more complaints or people say. Can people see my screen? Someone else besides Jonathan? All right, we're good. Yeah, Jonathan, I don't know. Are you logged in through the Zoom app? Or are you on some? Yeah, I'm sorry. I'm not sure. I've never had that issue before. Maybe try logging out and logging back in. But I'm gonna keep going. I'm sorry. I don't know how to help with that technical issue. But maybe we can chat afterwards. Okay, I think. Okay. Bye, Jonathan. I'm sorry, guys. Ben, you can only see half of the screen. You can see everything here, right? You can see up to here. I am only showing half of my screen, but that's all that we need to see. Ben, we're good? Jeez. Okay. Anyways. Oh yeah, so when I say a pattern is not clean, basically what I'm saying is, you know what, I'm actually gonna make it so no one can write any more chats. How about that? That's an easy thing to do. All right, I just killed the chat, so no one can type any more messages in chat. Should have done that earlier. Okay, moving on. Now, no interruptions. Sorry, guys. Anyways, when I say a pattern is not clean, doesn't mean it's useless. It just means it's not ideal. But if you were looking for a double top here, like what the heck is this in the middle of a double top? I'll show you some better double tops. But I was still kind of looking for it because we had 3,800 as a resistance the whole week. So yeah, there was a little bit of a drop. It wasn't an amazing play, but you could have played that, you know. And here you have, look at, it's really, again, it's not very clean or perfect, but it is a double top within kind of a double top. And I'll actually show you it's within an even bigger double top. And here you have, you kind of have a little bit of an inverse head and shoulders. And what this pattern I like, it's what I call, I don't know what I call it, but it's like a symmetry pattern where basically we drop and then we bottom, we either double bottom, high or low, inverse head and shoulders, and then the rally kind of mirrors it. See how it's like pretty much symmetrical? It's like it reclaims about the same level as where the drop came from, and also about at the same pace. It doesn't take too much longer or too, it's about the same time interval to retrace that drop. And that's what I use a lot of times. Granted, I would have had my 3,800 resistance level, but on a drop like this, if I get in, say on the high or low, one exit level is go back to the high of day or right before it dropped, if that makes sense. And then, oh yeah, so right here, you see this is when I said there was a double top within a double top within a double top. That's what I meant earlier. Granted, I was hoping this would actually drop more, but we were just so bullish that it didn't really matter. This was the overnight action here. And nothing really to say about this except that it tested this 37.40 3 times and held, which is pretty bullish considering this was my real support level. This was a minor support level. So the fact that it never even made it here was pretty bullish overall. Here, you see, here's something I want to point out. So this was, I believe, Wednesday. So we'll look at Wednesday. This is Wednesday. And this is the week. So Tuesday, Wednesday, Thursday, and then Friday. We remember we gapped up from the lows of last week, and we gapped up over 3,700, which was a major resistance level. And the fact is, on Wednesday, we had huge strength in the sense, even though we gapped down, even though overnight we dropped a lot and then we rallied. If you see here, and at the end of the overnight action, so this was the overnight action into Wednesday, we actually, I said 3,700 was support. We did technically break it by like a few points, but then it pretty much reclaimed, made a higher low right around 3,700, and then right at the open, literally at the open, it took out my 3,725, which I said, I think on Twitter and other places, where that was my green line, like that was my go line for bull. So again, even though we gapped down, we made good bottoming action overnight and pre-market. Really good rally. On days when there's huge strength like this, I don't mean like the market gaps up, pops 20 and then fails. This, look, like from the open, this was what, 70 points off the open. On these kind of basically days where it looks like it's a trend up day, I always say, and this is from personal experience, I've done it so many times, don't be looking to getting puts on days like this. I've tried so many times in the past wrongly to fight a day like this. On a day like this, when it's so strong, we held supports overnight, the week is bullish, pretty much everything is bullish, the trend is up. You want to be in a buy the dip mentality, because look, here's a perfect example. And I think I said this on my webinar the other day. Right around here, around noon, I literally went to walk my dog. And the reason being is that, look, lower high, double top, right? Nope. Bear trap right there. I went to walk my dog because I knew there was no point in me putting a trade here, because if I buy puts, I could get screwed. I was leaning like a chopper kind of situation, because again, if the market action is telling you strength overall, buy the dip, I'm more suspicious of, if this was a different scenario where we had been down a lot and then we broke this support at 3,800 recently, and then we were just retesting and failing, that would be a completely different scenario. But in this scenario, I purposely left because I was like, there's nothing I can do here that's going to end well. And of course we trapped, we rallied and then we failed into the end of the day. And maybe you could have played this, but it's not, again, this is like a weird pattern. I mean, you could maybe make out a head and some shoulders here, but again, it's not very clean. You could have played this, but it's more risky, and for folks who are less confident in it or want more, confident plays, this is a little more risky. So that's why, just because you see this, oh, double top, lower high, doesn't mean anything without the context. That helps. So okay, so I already talked about the overnight action. Higher, and this higher low is great because look, this bottom pretty much started at 3 a.m. and kind of completed at 9 a.m. So that's a 9-hour higher low. That's much different than if you're looking at a 1-minute chart or even a 5-minute chart and you make like, I'm just gonna pick out a random example. I don't even know. Let me pick a random example. I can't find one. I can't find a random higher low example. All right, like right here, right? This is random overnight thing. Like, look, we look at this. We dropped overnight. Granted, it's overnight action, which is kind of meaningless for this purpose. But if you got to right here and you got biased, you could be like, oh, look, we're about to inverse head and shoulder, But this was a what? This was like half an hour or just over. So, and it wasn't very, it wasn't very clean and beautiful, and so like time does matter when you're looking at patterns. Time does matter. Hi, Mike. I see you raise your hand. If you have a question, I'll get to it near the end. You can keep your hand raised, but I'll take your question later. So the more time, the better. I mean, you don't want to wait forever, but time is important. This was Tuesday. This was Tuesday, right? Okay, so Tuesday was, I'll show you it here because this is easier to see without the overnight. Tuesday, again, we gapped up and rallied, but once again, you saw I had 3,800 resistance. We didn't quite get there, but we started dropping and basically we consolidated and chopped the rest of the day after the opening move. So again, if you had calls from Friday, which would have been tough because we ended pretty bad, not bad, but we didn't end great on Friday going into OpEx. So for all I know, we could have gapped down or opened, flat. So this would have been a pretty big gamble in my opinion. But say you did gamble or you chased off the open, which I don't really recommend. Once we got about, 30 an hour after the open, there's not really a play here because we got the 37.80, which is only about 20 points off my resistance. So it's not really a reason to play calls. But the problem is it's hard to buy puts because again, because of this gap and go showing huge strength, you're fighting the trend. You're buying a much lower probability trade by thinking downside. And as you can see here, just like here, where we kind of teased a little bit of a downside, but really it was just part of a chop. So that's good to see. Let's see. I'm gonna find a few more cool patterns, and then I'll take questions because I think this is already going a little long. But I think that's some useful stuff. Oh, this was I believe this was Friday the 17th, right? 17th Friday. I'll just talk about it in the context of this is the S&P, no futures, so it's a little more easier to see. Friday, pretty choppy. You could say maybe this is a head and shoulder, but what level is this? Yeah, okay, 3,700 was resistance, so you could have played this. Now, granted, this is a low. So here's the thing. This is a very lower time frame. Like this only formed in what 30 minutes. But I will say this, and you gotta look back when a lot of times what will happen is we make a quick opening move that goes up or down pretty fast, and we hit either a resistance or support that's much closer. See here, we only got about 40 points off the open. Whereas, here we got 70 points off the open. Here, we got 50, 60 points off the open. We were still in that kind of like, oh, maybe we surged right into resistance on Monday, the first test of it. And, that's not a bad time, okay, to kind of, once you get to about here, to maybe you could try for a retest of the lows. Not the cleanest move, a little bit shorter time frame, but I have had experience with that fading the first opening move. But again, things have to align. It has to hit right about resistance, not go too far. Obviously, if we went all the way up, here, broke major resistance, that changes it. But because we were still below resistance, still in the trend, the range of these 2 days, then yeah, it was an okay downside. But I don't think I played it because it was Friday. It was OpEx Friday, where premiums are more expensive because of OpEx. So I just didn't like the risk reward. From 3,700 to 3,640, I guess. And then, yeah, the rest of the day was pretty much chop. Like you're not playing, I'm not playing these moves here. This is pretty much chop. Let's see what else I can find. see what else I can find, and I'll take some questions. Hopefully this was a little bit helpful, but yeah, patterns I like. When we talk about, I stick with basic patterns, lower high, double top, head and shoulders, but it has to be at like a resistance level. It can't just be anything that resembles one. And again, for supports to buy for calls, double bottoms, higher lows, inverse head and shoulders, but please react to it versus like, what I mean by that is if you're not a support, you're not thinking of buying puts at support or calls at resistance, you're not necessarily going to play the reversal, but you're ready to kind of see like, okay, maybe a pattern is starting to form. Like, oh, not the wrong thing. Like, let's go back to here. You see a pattern starting to form. And I actually remember, if you recall from my webinar, I actually got in too early in the pattern because I didn't think it was going to take this long. But say you could have thought, oh, I'm going to get in here because, oh, this is a higher low and some different things. And here's a line. But it wasn't clean. You see what I'm saying? It was a little bit more, it wasn't like a perfect bull flag. Plus, we were in the middle of the day, which is a hard time to buy. So, I mean, you should always be patient. Most of the time, if I front run a pattern, it either doesn't work or I've overpaid. It's better to miss a few plays here or there and to be more certain, if that makes sense. So yeah, and time is an important element to it. Basically, the less time frame the pattern forms, the more movement you want to see in terms of price change, like I showed here, because this was a pretty nice quick pop and fail at a resistance level. Whereas if you see here, we gapped over resistance. Here we gapped down and held support. So this was the hard line, just like it was here. But here you're coming in from a bouncing, reversing down. Whereas here, here you broke up, and here you're reversing towards the upside. So that's how I look at things. You gotta know where the big lines are. And again, don't front run, because sometimes we break or sometimes we hit it and chop for an hour and then drop. There's various things that can happen. Like, oh, there was a day. I'm gonna show some cool days from in the past. Let me go farther in the past, and then I'll take questions. I remember there was some cool patterns. Like right here, this was May 31st. We dropped down. You see here, this was like a lower low, and then we took off. I didn't get in because this lower low was deceptive. And then here, after what? This is what we're at about 2 hours after the open. We basically drop, and then we kind of, I call these like indecision candles, where basically we don't do anything. And then finally we get this nice green candle. Look at that, 10 points in a 5-minute candle to kind of complete that higher low. So I would have maybe got in maybe right here, right after this green candle got over these wicks right here. And look at all this beautiful green. I like playing patterns like this. Like, I don't like playing this, So let me find some. There were some patterns from a few, like this is like a few weeks and maybe even months in the past. Let me find a couple more, and then I'll take questions. Oh, right here. This was CPI day in May, and you can't see this. Actually, I'll show it to you. This is May 11th. So let me go to May 11th, because this was an oops, that's the only one. May 11th. Okay. Oh, I have to go up because I don't think we were this low in May 11th. May 11th. Okay, May 11th. And I'll show this, and then I'll take questions. Okay, so May 11th, this was a day where we had, I'm assuming, bad CPI numbers, because I don't know where we closed, but we closed here. We dropped overnight. We rallied into the CPI, and then look at this. Boom, CPI happens. Terrible. And I've seen this on a few CPI days, and I've played it. I've learned to play it. Right around 9 or so, we hit, basically this was a major level of support, and we kind of did like a false breakdown. And a false breakdown is only a false breakdown if it, not only does it go back over a little bullet breakdown, but it has to reclaim the next level above. But this, now you can make the argument that this is not a very clean inverse head and shoulders, because the shoulders are kind of messy, but I still think it's pretty good. And this is a higher low, plus the higher low was over the support level. So like we basically said, oh, hey, we're holding. And remember, this was a reaction or maybe even an overreaction off a news event, CPI. Remember what I said? On plays that have a little less time in terms of pattern formation, the quicker the initial move, the more sort of the quicker the initial move, the more kind of you can be a little bit more loose in the pattern and the time expectations, you know. And I'll show you why in a second of one that had more time. But this would have been a great, like right about here, when you saw this candle shooting up, a good entry here to catch, you know, like about 50 SPX, 60 SPX points. It wouldn't have been an amazing risk reward because the premiums would still have been high off the CPI event. But this is one of those where I've seen this happen before off CPI. So even though the profit percentage would have been lower because I had more confidence that it was going to work, I was willing to accept a lower profit because of my confidence in its reliability. But then let's let's look at the rest of the day. Remember what I said earlier? When I see big drops, and this applies more to drops than rallies and fails, more for reversals from downside to upside. You see, granted, we didn't quite make it here. We had a little bit of a chop, but look at the highs. The highs were roughly right where we were at the CPI, you know, right before the CPI. Remember what I said earlier? This wasn't a perfect mirror image like a couple days ago, but it pretty much went right back to the level of where the drop was. Now, granted, I probably would have just sold here and not got back in because, yeah, you would have made more holding it through here, but you had to fight through that. So I'm just telling you this, not because necessarily you should have held it till here. Probably, you know, here you would have gotten almost the same premium and without the extra risk. But I'm just giving you an example again of when it drops and it has a good bottoming pattern. A lot of times, you know, people look for like a V-shaped recovery. It's not going to be exactly a V, but it, you know, very loosely, you're going to get like fast down, fast up. And then I'll talk about the rest of the day and then I'll take questions. Now, here's an interesting pattern. And this literally happened. I don't know if it was April or March, but literally, I don't know. Yeah, go look on the last 3 CPIs before May. We literally had the same thing happen where we had this drop, inverse head and shoulders, and then this weird, I'm going to call it a double top head and shoulders, where basically, again, this 40-40 was major resistance because that's where we kind of topped out overnight. That's where we dropped from in the CPI data, and that's where we ended the rally. So I knew this was going to be a big line. Now you see this kind of looks very choppy, but look at this. This was about 10 o'clock, and this was about noon. So 2 hours, we get this somewhat choppy, but you know, you can see maybe a head and shoulders right here. You see it's not like perfectly clean. Or not even as clean as sort of this inverse head and shoulders, but because of the time factor, like if this happened, this pattern right here happened over the course of 30 minutes, I'd be much more suspicious. But because it happened over a 2-hour period, I'm pretty sure this day, earlier in the day, I was telling people, don't front run it, but go look at, I forget if it was April, March, or February CPI. This literal pattern happened where we dropped inverse head and shoulders, and we did this weird kind of triple top or head and shoulder, whatever you want to call this, like a weird topping pattern. And then we failed in the afternoon. And I was telling people that I think it might be coming, but don't front run because maybe it doesn't have, maybe it just consolidates and chops. But once it got to about probably, I don't know if it was probably this candle, because this candle was kind of still iffy. But once I saw it kind of making the turn after basically kind of making the second shoulder, I got inputs here. And what was interesting was, whew, look at this wicked candle. This was a good entry because I don't know what this candle would have got my premium to, but I don't think I would have been at a loss. I'm guessing this wick would have taken me maybe to even or slight profit, but right about here, you know what? I mean, you could enter a little even later for confirmation, but then you have to sit through that because you're overpaying. Oh, if you want to wait until this candle because we've broken this neckline, now the problem is you're late. You might still be able to catch the move. I like to catch it right where I think it's about to confirm. Like some people might be more comfortable maybe a little bit lower because they want to make sure this candle doesn't turn up again. But I have enough experience, and you know what'll happen is if it starts turning up and not working, I'll just sell it for a quick loss because I know if it works, I'm going to get, in terms of premium, 10, 15 points of premium. But if I sell for a loss, I'm going to lose maybe 2 points, usually 1 or 2 points is usually maybe, you know, something like that, much less. So it's a good decision making for me. So I just want to show you some patterns. Hopefully that was helpful. Like I talk about it on my other videos, like as part of just the conversation of what happened that day, but I wanted to kind of just spend a little time on that. Anyone want to raise their hands? I swear if anyone swears or anything else, I'm gonna like have to start kicking people out again. But I see at least 2 or 3 people I actually know and I've talked to personally. So you guys I know are safe, but please feel free to raise your hand, or if you want to talk, please. I closed off the chat. Give me 1 second. I'm gonna, dare I open the chat? No, you cannot have control of my screen. I'm gonna open up the chat, but I'm gonna close it if things, I just see some people join. I don't know if they're here for business or here for otherwise, but if no one has any questions, I think chat is open now. You can type in, I'll give it a couple minutes, but if no one has any questions, happy to wrap this up. Again, sorry about earlier. Again, I'm working on making sure that's not going to be an issue going forward. Those kind of interruptions. That's not what I'm about at all. That's probably the most foul language I've encountered in anything I read or watch or anything. So anyway, thank you guys for joining. I hope this was helpful. Some of the people I know, give me, oh, we got a hand raised. I'm going to ask you to unmute. Mike, I'm not familiar with you. Please tell me you have a serious question. I really hope so. I'm going to have to shut you up so quickly. Okay, Mike, I'm giving you the floor. You have to unmute yourself. Mike? Hi, Mike. Mike, I thought I heard something, but I didn't hear you speak. I'm gonna give you another minute and then I'm gonna move on. Anyone else have any questions? Feel free to type. Mike, you there? I don't know what's going on with Mike. It's fine. If no one has any other questions to type in, I will just end this webinar. Hopefully it was helpful. Thanks guys for joining me. And again, look forward to the 405 Club, as I've called it. Thanks guys for joining. Hope you have a good rest of your night. I should be online at least the early half of the week from before my move. Hopefully we have some good market action. Thanks guys. Catch you later.